All right, in this video, I'm going to talk about ways you can passively get interest on your money with relatively low risk. I'm not talking about dumping it all in the S&P 500. I'm talking about some strategies that have a lot less risk, and one of them actually is guaranteeing 11.5% yield, which is pretty crazy. That's kind of why I'm making this video. Historically, most high yield savings accounts and bonds, you're looking at that like 3 to maybe 6% on the high range. 11.5% seems pretty crazy, but there is something that came out recently and it's looking pretty good. But let's start with what an emergency fund is. An emergency fund is like 6 months to a year of savings you have in case of emergencies. Like, let's say you lose your job, maybe you have some car problems, you get sick. It's good to have a cushion of like 6 to 12 months of funds. And for me personally, where I would put that would be like a high yield savings account. This is the least amount of risk. They're usually FDI insured or have some kind of insurance. So you have your money there and you kind of feel safe about it. It's like kind of like a foolproof thing. And while you get less interest, you have more safety, less risk. So you're taking a lower interest rate, but you're getting lower risk and you have more liquidity, which means you can pull your money out a lot faster. Your money's kind of guaranteed to be there if you need it. And that's where a high yield savings account really shines. You're not getting as much interest as you could with some of the other options. So you're maybe leaving a little bit of money on the table, but having that peace of mind and having it somewhere where it's really safe and you got like FDIC insurance or some sort of insurance up to like a certain minimum kind of buys you some safety. And you really do want to have an emergency fund. It's just a buffer. Some people want to maximize everything, but I think having 6 months of just cash on hand for an emergency really does give you peace of mind. It makes it so you can sleep well at night. But let's say you got your emergency fund and you have it in a high yield savings account. There's a few different options out there. I mean, like most brokerages offer some sort of high yield account or a money market account. What you're looking at right now is about 3 to 4% for most of them. If you guys have one that's more than 4%, I would be interested, and you could put that in the comments below. I looked at mine. When I started mine, I was at 4.1. It's dropped down to 3.3. I'm not really going to move my money over because of less than 1%, but it's like it's better than it sitting in the bank and you getting almost no interest on it. So first things first, high yield savings account. That's where I'd put my emergency fund. After that, if I have more money sitting somewhere and I want to keep it in a really low risk level, but maybe I don't need it as soon, maybe I can be a little bit less liquid with it, that's where I like certain government bonds. Like the one I've been really eyeing lately that I have some money sitting in it's called SGOV. It's the ticker symbol SGOV. And SGOV is pretty interesting. It's short-term government bonds, 0 to 3 month treasury bond ETF. Right now, I think you're getting about 4.2 to 4.4%. So it's going to be a little bit higher interest rate than you'd see in a high yield savings account. And it's a tax advantaged account too. So the interest is exempt from state and local income taxes. It's a good spot for like parking your cash, to have some liquidity if you want to have some dry powder in case you want to purchase something soon. I'm not about like timing the market really, but maybe you want to have some money sitting somewhere for a big purchase. Maybe you're thinking on buying a car soon, purchasing a house, putting a down payment on for something. SGOV is a really interesting one. It pays your dividends usually earlier in the month. It's a pretty good one. It's where I started putting some of my money until I found this last one where I can get a little bit more interest with a little bit higher risk. But if I want to have some money set up somewhere and I want to be sure it's going to be there, not be having to wait on it, not be waiting on something to rebound, SGOV it's pretty cool. How SGOV works is it kind of just floats around $100 and then they pay out a dividend monthly. So the share price is pretty much always $100 and you get a dividend every month. That annual dividend adds up to about 4.2%. So it's better than a high yield savings account. The one thing with it is you're going to lose a little bit of the liquidity. If you needed this money like the same day, you'd have to sell the shares and then have the money transferred from your brokerage account back to your bank account. And some brokers take a day or two to do that. So you're just like a little bit less liquidity versus like a high yield savings account. That's like pretty instant. You get that money out pretty quickly. SGOV's still a pretty good bet. It's interesting though, because you're getting a little bit more interest than you would in the high yield savings account, and it's really not much different. I mean, you're probably looking at 1 or 2 more days of waiting to get your money pulled out. But that's where the emergency fund I would just keep in a high yield savings account. Let's say something does happen, you're driving, your tires blow out, you need to pull out some money real quick. You got your emergency fund for that. So that's the second one is SGOV. Now the third one I'm going to talk about, and this is the heavy hitter. This is something more new to me, and I've started investing in it. And this is strategy. So this is STRC. It's pretty interesting. Right now they have an 11.5% yield. So they're paying out 11.5% a year on your money invested. And it works in a similar fashion to SGOV, except it's not government bonds. It's a preferred stock of the strategy company. And their goal is to work similar to SGOV, but just with a much higher yield. So what you're getting with strategy is it's very similar to SGOV. It's kind of, the idea is to keep it around $100 a share. So the price doesn't really change much from there. Now it does have a little more risk than SGOV. I've seen the price of strategy or STRC go down a little bit. And it's like it will drop maybe $1, maybe $2 from that $100. So it could drop to that $98 range, but it usually bounces back up. And what's interesting about this one is it pays out once a month, and you're getting an 11.5% yield. So this is huge compared to a high yield savings account or SGOV. I mean, we're talking double the interest rate. And the big difference is you're taking a little more risk. Now I did some research on this one, and it's a preferred stock of strategy. But how I would explain it is it's pretty much a high yield savings account that's backed by Bitcoin. So strategy is the number one owner of Bitcoin. They have more Bitcoin than BlackRock's ETF. And they have $2.25 billion on cash reserves, and that's to support this monthly dividend. Now, I think that equals to about 30 months of dividend obligations. So for the next 30 months, they have enough cash to just pay out those dividends as necessary. So if I were to be parking money for maybe 2 years, 4 years, something like that, this is a pretty safe spot, it looks like. Now, if you need your money really soon, maybe you need it in the next few weeks. I don't know if I'd go with the strategy because it has a little more volatility. And what I've noticed especially is before the dividend payout, the volume jumps up. Everyone tries to get in before I think it's the 15th of the month. They do the record date for the dividend. So everyone wants to make sure they're being recorded for that dividend. After the dividend pays out, people have been pulling their money out. And what's interesting is STRC actually has a solution for this, and they're having a vote on it in the next couple weeks, it looks like, where they're going to try to have it pay out twice a month, actually. And their idea behind that is if it's paying out a dividend twice a month, that will actually reduce some of the volume of buying and selling, trying to time the dividend. And if that happens, it should be a lot less volatile and kind of stick closer to that $100 a share. So it kind of floats around $100 a share, and you're looking at that 11.5% dividend. Now, their theory for if the price drops too low is they'll just raise the dividend even more, and that would draw buyers in. If it goes over $100, what they do is they sell the shares they have and use that money to buy more Bitcoin. So their long-term plan is they're kind of just betting on Bitcoin to do better than 11.5%, and they're using investors as liquidity. So this is an interesting option here if you want to have money sitting somewhere a little bit more passively. Before this, like most high yield savings accounts and bonds and stuff, you're looking at like 5% on the high end. This is 11.5%. It's a huge dividend. It's paid out monthly. I think in the next month or two, it's probably paid out every 2 weeks is what it looks like. So that gives you 3 different options for where you'd want to park money. Now, obviously, your high yield savings account is the lowest risk with the highest liquidity. You can pull it out very quickly. SGOVs are going to be a little bit less liquidity, but low risk as well. And then STRC, a little bit higher risk, but another good option. That's all I got for today. Thanks for tuning in. As always, if you haven't subscribed, be sure to subscribe, share the video, drop a like. Thank you for tuning in.